Right, we have been discussing adjustment part. Now I'm going to discuss adjustment 11 for property, plant and equipment, re-evaluation as well as disposal adjustment. As well as we have to discuss EPF and ETF adjustment and leasing adjustment. Right, first one, think about re-evaluation part. Re-evaluation adjustment, it has given additional information 1. Second time re-evaluation also available. Second time re-evaluation. Trial balance, it has given land re-evaluation reserves also. It has given land re-evaluation reserves. This one very important. Second time re-evaluation. There were previous year re-evaluation surplus of land 9,000. When we are going to record this year profit and loss, you have to consider previous year value also. Right. First one, think about land. And building were revalued 31st March 21 at their fair value 130,000 as well as 215,000. First one, think about land. Profit and loss can be calculated by comparing previous year revaluation amounts and this year revaluation amounts. Land, it has given previous year revaluation amount. Fair value, it has given 150,000. This is the previous year revaluation amounts, 150,000. Now it has not given cost value. This is not first time revaluation. This is a second time revaluation. Therefore, when we are going to calculate this year profit and loss, you have to compare with previous year revaluation amounts and this year revaluation amounts. Therefore, this year revaluation amount equal 130,000 land. Therefore, this year revaluation amount lower than the previous year revaluation amounts. Therefore, land revaluation loss. This year loss equal previous year revaluation amounts minus this year revaluation amounts. This year revaluation loss equal 20,000. Now think how to record this year loss. Trial balance, it is given land revaluation surplus also. It means previous year revaluation surplus available, but this year loss. There are 3 marks available. First one, this value should be included note number 4 PP schedule as revaluation. Effect for land decrease, therefore deduct this value. Think about double entry. Effect for land decrease, land account credit. Normally revaluation loss should be included profit and loss accounts. But there were first time surplus available profit. Therefore, this is the way you have records. Profit and loss accounts for income statement. Income statement should be debit only. Balance part. Think there were previous year revaluation surplus available. Therefore, revaluation reserves accounts. Revaluation reserves account debit amount equal for previous year surplus. When we are going to record this year loss, think about which account debit and which account credit. Effect for land decrease, therefore land account credit. Effect for land decrease, therefore land account credit. Land. Second time revaluation. Land account credit. Think loss equal to 20,000. Total value land account credit. But normally loss should be debit profit and loss accounts. But trial balance, it has given land revaluation reserves 9,000. Amount equal for previous year surplus. Revaluation reserves account debit and balance part income statement debit. Therefore, income statement should be debit only 11,000. Land account credit 20,000 total value. Think about this year loss equal 20,000. Normally loss should be included income statement under the expense. But now total value cannot be included. Reason there were previous year surplus available. Therefore, when we are going to record in the company sum, this one should be included under other expense. 11,000 under other expense. Under other expense. And 9,000 amount equal for previous year surplus. We are going to record this year loss. Amount equal for previous year surplus should be included under other comprehensive income. Other comprehensive income. And other comprehensive income, how it includes? Within brackets like this. And other comprehensive income within brackets should be included. Within brackets, very important, should be included under other comprehensive income within brackets. This is the way you have includes amount equal for previous year surplus. When we are going to record this loss, මේ පාර loss එක record කරනකොට ගිය පාර surplus එකක් තිබිලා තියෙන නිසා ඊට equal ප්‍රමාණයක් අපි දාන්න ඕනේ other comprehensive income within brackets. And this one should be include PP schedule. Therefore, there are 3 marks available here. Second time revaluation. Second time. Then record it. 20,000, think about 11,000, as well as think about 9,000. Therefore, 9,000 within brackets. 9,000 within brackets as a land revaluation loss. Land revaluation loss. We are going to record this year loss. Why it has included here? There were previous year profit. ये पार profit එකක් නිසා තමයි මෙතන දාන්නේ. මේ දාන්නේ profit එක නෙවෙයි මේ පාර loss එක. Then effect for property plant equipment decrease land as revaluation 20,000. 20,000 total value should be deducted. If it has correctly recorded, closing balance should be equal revaluation amounts. Land is a non-depreciable assets. Accumulated depreciation also 0. Therefore, think about net book value also equal revaluation amounts. And think about revaluation loss normally should be included under other expense, but total 20,000 cannot be included, only 11,000. Balance part should be included under other expense as a land revaluation loss. Think how to record this year loss. 20,000 මෙතන දාන්න බෑ බලන්න. There were previous year surplus. Amount equal for previous year surplus and other comprehensive income within brackets. Balance part and other expense. And total loss 20,000 and other comprehensive income. Then think about building revaluation also. But building has given a first time revaluation. Building, it has given cost value 500,000 and given accumulated depreciation opening balance 250,000. Depreciation rate also given 10%. Think about depreciable asset revaluation. It has given revaluation end of the year, 10% annual rate. Opening accumulated depreciation 250,000. Building cost value equal 500,000. Think how to calculate profit and loss. Building is a depreciable assets. Building is a depreciable assets. Therefore, cannot be compared with cost value. You have to compare with net book value. Therefore, cost value equal. It has given cost value. Cost value of building it has given 500,000. And annual depreciation. Annual depreciation you have to calculate based on cost value. It has given percentage 10%. Therefore, annual depreciation equal 50,000. Then think accumulated depreciation. Accumulated depreciation as at 31st March 21. Closing balance. as at 31st March 2021. It has given end of the revaluation. Opening balance 250,000 plus annual depreciation 50,000. Therefore, at the time of revaluation, accumulated depreciation equal 300,000. Then think about net book value. Net book value. Net book value equal as of the revaluation date. Cost value 500,000 minus accumulated depreciation equal 300,000. Therefore, net book value equal 200,000 at the time of revaluation. Therefore, now so we have to compare with net book value and revaluation amounts. Cannot be compared with cost value. Think about revaluation amount higher than the net book value. Therefore, build in revaluation surplus profit. Build in revaluation. Build in revaluation profit surplus equal revaluation amount equal 215,000 minus net book value equal as at the revaluation date 200,000. You have to compare with net book value and revaluation amounts as at the revaluation date. Then think you have to record annual depreciation, 2 marks available for that. Depreciation expense account debit, accumulated depreciation account credit. Therefore, annual depreciation should be included under administration expense as well as PP schedule. Then accumulated depreciation as at the revaluation date also should be recorded PP schedule. And revaluation profit also 2 marks. Build in account debit, revaluation reserves account credit. This is the first time revaluation. Therefore, total value should be included revaluation reserves accounts. That value should be included under other comprehensive income. Now think how it records revaluation profit and other comprehensive income as a built-in revaluation profit 15,000. Total value can be included. Reason first time revaluation as a built-in revaluation profit. Built-in revaluation profit 15,001 marks here. As let's think about note number 4 PP schedule. Revaluation profit 15,000 here plus and annual depreciation also calculated equal 50,000 here plus and total depreciation 300,000 as a depreciation adjustment for revaluation here deduct 300,000 as well as and accumulated depreciation also as a depreciation adjustment for revaluation deduct 300,000 at the time of revaluation. Total depreciation deduct both sides. If it has correctly recorded, here closing balance should be equal revaluation amounts. And accumulated depreciation 0. If it has given end of the revaluation, accumulated depreciation 0. Net book value also equal revaluation amounts. As well as annual depreciation should be included under administration expense also. And working as a building depreciation and administration expense 50,000 should be included as a building depreciation. As a building depreciation. As a building depreciation. Revaluation part okay. At the same time, I will discuss disposal adjustment also. It has given disposal adjustment relevant for motor vehicle. See the adjustment number 6 relevant for disposal adjustment. Revaluation adjustment I have discussed. Think about additional 6. Motor vehicle which had been acquired for 300,000 on 1st April 2018 was sold for 150,000 on 31st December 2020. No entry has been recorded in this regards. Disposal adjustment. First one, think about cost value of disposal assets. 1 marks available for that. Cost value of disposal assets Cost value of disposal asset equal thing values in 1000, 300,000. And disposal value is given 150,000. Disposal value, effect for cash. Disposal value. Disposal value equal 150,000. It is effect for cash. As well as you have to calculate accumulated depreciation. Accumulated depreciation of disposal assets. Accumulated depreciation from purchase date to disposal date. Therefore, think about cost value equal 300,000 of disposal assets. And given building a motor vehicle depreciation rate is given 20%. Annual rate it is given additional 11. Motor vehicle depreciation rate is given straight line methods 20%. Think how to calculate accumulated depreciation. Cost value equal 300,000. Annual rate is given 20% into, think about years from purchase date to disposal date. It has used from purchase date to disposal date 2 years and 9 months. 2 years and 9 over 12. This is the accumulated depreciation from purchase date to disposal date. Therefore, try to calculate accumulated depreciation. 165,000. Accumulated depreciation. Then you have to calculate disposal profit and loss also. Disposal profit and loss. For that, you have to prepare disposal accounts. Disposal profit and loss. For that, you have to prepare disposal accounts. Prepare the disposal account also. Disposal profit and loss. As well as you have to calculate annual depreciation also. Annual depreciation. This is the way you have to think if it is given disposal adjustment. Annual depreciation of motor vehicle. Disposal profit and loss can be calculated by preparing disposal accounts. That part I will discuss later. Think how to calculate annual depreciation. Disposal asset equal 300,000. Our account period end of the year 31st March 21. Think about opening balance it is given. Opening motor vehicle equal 800,000. But disposal asset it is given 300,000. Therefore, you have to calculate depreciation separately. Motor vehicle available 800,000. But disposal asset it cost value equal 300,000. Up to disposal date, it has available only thing during the account period. Our account period end of the year 31st March 2021. Therefore, beginning of the year 1st April 2020. During the account period, disposal asset available 9-month period. You have to consider from 1st April 2020 to 31st December 2020. Our account period end of the year 31st March 21. Therefore, disposal asset available up to disposal date during the account period 9-month period. Total motor vehicle available 800,000. It has given additional 11th one. But disposal asset it cost value equal 300,000. Therefore, try to calculate annual depreciation. Disposal assets cost value 300,000. Annual rate is given 20%. But it has available only 9 over 12 during the current period, 9-month periods. Therefore, here depreciation equal 45,000. And balance parts, total motor vehicle available 800,000, but disposal only 300,000. Therefore, balance part it cost value equal 500,000. 800,000 minus 300,000. Based on that value 20%, it has not disposal. It has available entire year. Therefore, here value equal 100,000. Therefore, annual depreciation equal here total amounts equal 145,000. Therefore, this is annual depreciation of motor vehicle. Annual depreciation. Think how many months available each assets. Disposal asset available 9 months. Balance part is not disposal. Total motor vehicle equal 800,000. But disposal asset equal 300,000. Then think how to calculate disposal profit and loss. You have to prepare a disposal account for that. Prepare the disposal accounts. By preparing disposal accounts, disposal profit and loss can be calculated. Therefore, this is the disposal accounts. Cost value 300,000. Motor vehicle account credit, disposal account debit. Cost value should be recorded debit side as motor vehicle. Motor vehicle account credit, disposal account debit. And disposal value, this one if it for cash account debit, disposal account credit 150,000 as a cash. And accumulated depreciation account debit, disposal account credit 165,000. Accumulated depreciation account debit, disposal account credit. Now by closing disposal account, profit and loss can be calculated. Credit side increase. Credit side total amount equal 315,000. Take that value debit side. Therefore, difference value equal 15,000. That is profit. Disposal profit equal 15,000. This is the disposal profit. Therefore, disposal profit should be included under other income. Under other income. By closing disposal account, profit and loss can be calculated. Now think how it records. Cost value should be recorded property, plant and equipment schedule. Effect for motor vehicle decrease. Disposal value effect for cash account debit. It means cash increase. And accumulated depreciation should be recorded note number 4, PP schedule. Effect for accumulated depreciation also decrease. Annual depreciation 2 marks. Depreciation expense account debit. That value should be included under distribution expense, as well as accumulated depreciation account credit. Under note number 4 also should be included. Right, first one, record PP schedule, cost value, and accumulated depreciation, as well as annual depreciation. As a disposal, cost value 300,000, effect for motor vehicle decrease 1 marks. And as a disposal and accumulated depreciation, it accumulated depreciation 165,000, deduct 1 marks. Annual depreciation also at here 1 marks. Depreciation expense account debit, accumulated depreciation account credit. Then here closing balance equal 500,000. And think about accumulated depreciation also. Plus value at minus value deduct. Accumulated depreciation closing balance equal 300,000. Then cost minus accumulated depreciation, here net book value equal 200,000. Then annual depreciation should be included under distribution expense also. As well as disposal profit available, annual depreciation equal 145,000. Under distribution expense 145,000 as a motor vehicle depreciation. As a motor vehicle depreciation. And disposal profit should be included under other income. Note number 1. If there is a disposal loss under the expense, but disposal profit under the income. As a motor vehicle disposal profit. As a motor vehicle disposal profit equal 15,000. And disposal value it has given 150,000. Disposal value 150,000 if it for cash. Reason it has given additional information. If it has given additional information, those are not recorded yet. Therefore, disposal value if it for cash also increase. Cash account debit. Cash available trial balance. Therefore, that value should be added to the cash available in the trial balance. 150,000. If it for cash increase, cash account debit, disposal account credit. Those are not recorded yet. Available adjustment if it for cash also. Right now, disposal adjustment also okay. Then try to complete property, plant and equipment schedule. Office equipment, no adjustment effect, but you have to calculate depreciation 10%. Office equipment, it has given 320,000. Based on that value, 10% should be calculated. No adjustment effect for office equipment. Therefore, office equipment annual depreciation should be calculated. Percentage 10% based on cost value. Therefore, 320,000 into 10% equals 32,000. Here plus. As well as office equipment depreciation should be included under administration expense also. Therefore, office equipment cost value equal 320,000. And accumulated depreciation here total amount equal 100,000. Then cost minus accumulated depreciation equal 220,000. Property, plant and equipment. And office equipment depreciation 32,000 should be included under administration expense also. 32,000 under administration. As office equipment depreciation. As office equipment depreciation expense 32,000. Then complete PP schedule also. Take the net book value total amount, that value should be included. Financial position also 130,000 plus 215,000 plus. Take the total value. Therefore, PP total value equal 765,000. Take here total value 130,000 plus 215,000 plus this one plus this one. Therefore, 765,000. That is the value should be included under non-current asset as a property, plant and equipment. As a property, plant and equipment under non-current assets. Here, note number 4, 765,000. But total value should be included. Then I will discuss leasing adjustment. After that, EPF adjustment. Additional information should be done from the beginning. Think about leasing adjustment. Leasing adjustment, it has given additional information. 9th one. Additional 9th one, it has given leasing adjustment. Company acquire motor vehicle on 1st April 2020 under finance lease for use distribution of goods. On this date, fair value of motor vehicle equal 220,000. Fair value, this is market value, and down payment 70,000 has to be paid. Down payments. Balance part, think about that is the initial lease liability. For the annual lease installment 50,000. Think values in 1,000. Lease term of motor vehicle is 4 years or 4 years lease period, and lifetime is given 5 years. The ownership of motor vehicle is past. It is relevant for depreciation for the year calculation. At the end of the lease period, think how to calculate depreciation. Ownership of motor vehicle is passed to the company. And given lease interest for 4-year period is given. Lease interest. Then down payment and current year lease installment has been paid, but no adjustment has been made in this regard in the books of accounts. No adjustment has been recorded. Think about normally you have to apply 4 steps. Down payment equals 70,000. Think values in 1,000. Down payment 70,000. Think how it records. As well as initial lease liability equal, think about fair value 220,000, but paid in cash equal 70,000. Therefore, initial lease liability equal 220,000 minus 70,000. initial lease liability equal 150,000. Then this is the installment equal 50,000 installment, and current year lease interest equal 20,000. Current year lease interest. Down payment paid in cash 70,000, effect for cash, as well as installment also effect for cash, paid in cash. And fair value, it is effect for right of use of assets. Asset purchase under finance lease should be considered as a right of use of motor vehicle. Cannot be considered as a property, plant and equipment. Therefore, as a right of use asset, you have to consider 220,000. 220,000 as a right of use asset. Right of use asset. Right of use motor vehicle. Right of use motor vehicle equal 220,000. Then you have to calculate depreciation also. Depreciation. Depreciation, how to calculate? Cost value equal to 220,000, think values in 1,000, divided by, think about ownership of asset is passed to the company at the end of the lease period. Therefore, you have to use useful lifetime. If ownership is not passed, divided by 4, lower period. But if ownership is passed at the end of the lease period, should be useful lifetime. Therefore, divide by 5. Then can be calculate annual depreciation also. Annual depreciation equal 440,000. So 44,000. Annual depreciation. Think about down payment effect for cash and current year lease installment effect for cash. Effect for right of use of asset 220,000. Think about double entry, cash account credit, right of use asset account debit. Now I am not going to discuss ledger accounts. I am going to discuss how to prepare, how to calculate, how to record in the financial statement. But down payment, cash account credit, right of use asset account debit. Initial lease liability, right of use asset account debit, lease creditor credit, lease creditor. Then depreciation expense account debit, accumulated depreciation account credit, as well as annual interest, lease interest expense account debit, lease creditor credit. And installment paid in cash, cash account credit, lease creditor debit. Lease creditor also should be recognized as a current liability and non-current liability. Therefore, now I'm going to discuss, prepare only lease credit accounts. Reason lease liability should be recognized separately, current and non-current liability. Therefore, I'm going to discuss only lease creditor. Think about effect for lease creditor, initial lease liability 150,000, right of use asset account debit, lease creditor credit. Right of use asset account debit. Right of motor vehicle, right of use. Right of use motor vehicle account debit, lease creditor credit. This is the lease creditor. Then lease interest equal 20,000, lease interest 20,000 as lease interest. Lease interest expense account debit, lease creditor credit. Current interest became expense. As well as current year installment 50,000 paid in cash, cash account credit, lease creditor debit. This is the lease credit account. Cash account credit, lease credit account debit, cash. Think about initial lease liability. Down payment not effect for lease creditor, down payment 70,000, cash account credit, motor vehicle account debit. You have to record initial lease liability, current interest and installment. Then lease creditor closing balance can be calculated. Lease creditor, credit side increase and take that value debit side. Difference value balance carry down. Difference value balance carry down. Difference value balance carry down. Therefore, this one minus this one here will be equal 120,000. That is a liability. And balance brought forward that value. Therefore, this is the value should be included financial position as a lease creditor. Then this value should be recognized separately as a current liability and non-current liability. Then think how much should be included under current liability and how much should be included under non-current liability. Lease creditor. Lease creditor included under current liability. Lease creditor included under current liability. Lease creditor included under current liability. Think about total liability equal to 120,000. That value should be recognized separately. Total value cannot be included under non-current liability. Reason, next year also we have to settle installments. Therefore, under current liability as a lease creditor should be included installment minus next year interest. 50,000 minus 15,000. Therefore, under current liability should be includes installment minus next year interest. Therefore, value equal 35,000. This is the value should be included under current liability as a lease creditor. Balance part under non-current liability as a lease creditor. Balance part should be included under non-current liability. Under non-current liability. Think about under non-current liability, total liability equal 120,000. From that value should be deduct 35,000. Total liability 120,000. From that value should be deduct value include under current liability. Therefore, here difference value equal 85,000. Therefore, this is the value should be included under current liability as a lease creditor, and this is the value should be included under non-current liability as a lease creditor. As well as lease interest should be included under finance expense. Lease interest under finance expense. And down payment, if it for cash decrease, this one cash decrease, as well as installment also paid in cash decrease. Then motor vehicle 220,000 and accumulated depreciation should be included under right of use assets, separate note under note number 5. As well as annual depreciation should be included under distribution expense also. Under distribution expense also. Lease creditor can be recognized here also. Under current liability and non-current liability. Think about this one. Lease creditor current liability should be included installment minus next interest. 50,000 minus 15,000. This is the value should be included under current liability. If it is given interest separate like that, can be recognized lease creditor. This is the value should be included under current liability. And think about balance part also. Each year installment equal 50,000 minus interest 9,000. Interest 9,000. Therefore, here value equal 50,000 minus 9,000 equal 41,000. And here 50,000 minus interest equal 6,000. Therefore, answer equal here 44,000. This one plus this one, this is the value should be included under non-current liability. Therefore, here total amount equal 85,000. That is the value should be included under non-current liability as a lease credit. Like this can be calculated if it is given interest clearly. Therefore, this is a current liability and this is a non-current liability. Installment minus interest, take it total value. Next year value should be included under current liability, balance part under non-current liability. It can be calculated by preparing lease credit account also. Then think how it records. Paid in cash down payment as well as annual lease installment. It has available adjustment, those are not recorded. Therefore, down payment 70,000 and installment 50,000 paid in cash, effect for cash also decrease. That value should be deducted from cash available in the trial balance. Therefore, trial balance it has given cash balance. From that value should be deduct 70,000, that is a down payment, as well as annual installment 50,000. paid in cash deduct. Think correct cash balance, adjustment should be done. Then under note number 5, right of use assets. Asset purchase under lease cannot be considered as a property, plant and equipment. Therefore, under note number 5, as a right of use motor vehicle. Here, right of use motor vehicle, right of use motor vehicle, it cost value equal 220,000. From that value should be deduct accumulated depreciation. Asset purchase beginning of the year. Therefore, accumulated depreciation as accumulated depreciation should be deduct 44,000. Annual depreciation. Then can be calculated net book value. This one minus this one, that is the value should be input financial position. Think how to disclose. Therefore, 176,000. This is the value should be include financial position as a right of use of lease property. Cannot be considered as a property, plant and equipment. Cost minus accumulated depreciation. Asset purchase beginning of the year. Therefore, annual depreciation should be deduct as accumulated depreciation. 176,000. Recorded financial position as a right of use of lease property. 176,000. Then think about lease interest and lease creditor also should be disclosed financial person. Lease creditor under current liability, installment minus next interest. Installment equal 50,000. Therefore, here 35,000. And under non-current liability, 85,000. Total value equal 120,000. But separate should be disclosed. Reason next year also we have to pay installments minus next year interest under current liability. Then think about lease interest as well as depreciation expense. Current year lease interest became expense only 20,000. Current year lease interest as a lease interest 20,000 as well as motor vehicle depreciation. Right of use asset depreciation also 44,000 under distribution expense. Right of use assets. Right of use motor vehicle. That is not property, plant equipment. Right of use motor vehicle depreciation. Also expense. That value should be included under distribution expense. Depreciation. Right of use asset depreciation 44,000 should be included under expense also. Think about lease in adjustment. Asset purchase beginning of the year. Right of use assets. Think how to calculate depreciation and how to recognize lease creditor current and non-current. Then think how to disclose on the financial statement also. Additional information it has given. No adjustment has been recorded. Think lease creditor can be recognized without preparing ledger account. Also lease creditor can be recognized. Think about these steps. Down payment. Think about initial lease liability, then current lease interest, as well as installment paid in cash, and lease creditor. Think how to separate as a current and non-current assets liability. Then next one, EPF adjustment. EPF adjustment. EPF adjustment. Think about trial balance. It has given salary. Trial balance it has given salary also. It means part of adjustment has been recorded. Trial balance it has given salary account balance 108,000. It means part of adjustment has been recorded. Therefore, balance part should be done. Try to recognize salary available in the trial balance net or gross salary. It has given company contribution for EPF and ETF 15% and 5% respectively on the gross salary of the employees, and EPF contribution of employee 10% on the gross salary of the employees. Both company and employee contribution for EPF and ETF has not been recorded. You have to consider employee contribution. මෙන්න මේක දිහා තමයි අපි බලන්න ඕන. EPF contribution for employee effect for salary accounts. Trial balance sheet has given salary account balance. There were double entry. Cash account credit, salary account debited. But EPF contribution of employee also effect for salary accounts. Normally contribution of employee for EPF, salary account debit, EPF payable account credit. But in this example, it has not recorded. Contribution of employee for EPF has not been recorded. Therefore, trial balance it has given as a salary, that is a net salary. Therefore, from the beginning, you have to calculate gross salary, trial balance available, net salary. How to recognize EPF contribution of employee has not been recorded. It is also effect for salary accounts, not recorded, but trial balance it has given salary account balance. That is a value paid in cash. Cash account credit, salary account debit. There were double entry. Therefore, trial balance available net salary. From the beginning, you have to calculate gross salary. Based on gross salary value should be calculated. Trial balance available 108,000. Net salary, that value divided by 90 into 100. This is the way you have to calculate gross salary. Therefore, gross salary equal to 200,000. Based on this value, you have to calculate EPF and ETF. EPF contribution of employer. EPF contribution of employer as well as employee. Gross salary equal to 1,000. Based on that value, 15%. Therefore, value equal 30,000. Contribution of employer as well as EPF contribution of employee also should be calculated. Employee percentage equal 10% equal this one employee contribution of employee value should be calculated based on gross salary. Think how to calculate gross salary. Think how to recognize salary, gross or net. Then you have to calculate ETF also, contribution of employer. ETF contribution of employer value equal 5% based on gross salary. Therefore, value equal 10. Now think how to record in the ledger accounts. Salary available, trial balance also. Normally, you have to prepare 5 ledger accounts. Salary accounts, EPF expense account and EPF payable accounts, ETF expense account as well as ETF payable accounts. Think salary available, trial balance. Therefore, this is salary accounts. Trial balance it has given balance 108,000. That value should be included as a balance brought forward. Then contribution of employee also effect for salary accounts. It has not recorded. Therefore, you have to prepare EPF payable account now. EPF payable accounts. Contribution of employee, double entry salary account debit, EPF payable account credit. EPF payable account credit as a salary. Salary account debit as a EPF payable. Contribution of employee effect for salary, part of salary. Then contribution of employer another expense 30,000. EPF expense account debit, EPF payable account credit. Therefore, you have to prepare EPF expense account also. 30,000 contribution of employee another expense. Therefore, EPF expense account debit, EPF payable account credit. EPF payable account credit as a EPF expense. EPF expense account debit. EPF expense account debit 30,000 as a EPF payable. EPF expense account debit, payable account credit. ETF also same way. There are 2 ledger account for ETF. ETF expense account debit, ETF payable account credit. 2 ledger accounts. ETF expense. as well as ETF payable value equal 10,000. ETF expense account debit, ETF payable account credit. Therefore, here as ETF payable and here as ETF expense. Right now, think how to records. There are three expenses. Salary expense. Think about salary account total value equal to 1,000 expense. Therefore, income statement and administration expense as salary. Therefore, this one expense. Income statement. This is value should be included as salary to 1,000. EPF payable is a liability and current liability. Credit side increase. Then difference value balance carry down from debit side to credit side. Therefore, here balance carry down. Balance carry down liability. And it should be brought forward credit side. Balance brought forward credit side. Therefore, this one should be included under current liability. EPF expense, expense under distribution expense. ETF expense also distribution expense. But ETF payable under current liability. There are three expense under administration: salary, EPF expense, and ETF expense under administration. But EPF payable and ETF payable under current liability. Record it. There are 5 marks. Note number 9, accrual expense and other current liability. Therefore, here EPF payable, value equal 50,000, as well as ETF payable, value equal 10,000, and under administration expense also. Under administration expense also, salary as a salary, gross salary 1,000, but trial balance available 180,000. Gross salary should be included. Then EPF expense 30,000, only contribution of employer, as well as ETF expense also same way, only contribution of employer became expense. There are 3 expenses relevant for employees under administration. Then all the adjustment we have discussed, very important: lease in adjustment available, EPF available, revaluation available, damage stock available. All the example it is given like that. All the adjustment we have discussed. Now see the trial balance. Trial balance also it has given bank loan, debentures, and fixed deposit also adjustment. You have to calculate loan interest also. Think about bank loan from the beginning. Bank loan 450,000 bank loan, and loan interest should be calculated based on this value. As well as it has given loan interest expense also. Loan interest expense also given. This one, think about bank loan interest expense 29,000 available trial balance. That is a interest paid in cash. Right, first one, bank loan should be included non-current liability. Bank loan 450,000. Based on this value, 14% loan interest should be calculated. It should be included financial expense. First one, bank loan 450,000 under non-current liability. Bank loan should be included non-current liability 450,000. Just given 14% bank loan. 14% bank loan, value equal 450,000. Then loan interest finance expense. Finance expense as a loan interest. As a loan interest, you have to calculate based on loan 14%. Trial balance available paid in cash value. under finance expense. As a loan interest 450,000 into 14% you have to calculate. Therefore, loan interest expense equals 63,000. But trial balance it has given 29,000 as a loan interest. That is a value paid in cash. Therefore, balance part accrual loan interest. Under current liability as an accrual loan interest. Accrual loan interest equals 63,000. That is a value should be input as expense. But trial balance available 29,000. That is a value paid in cash. Therefore, difference value accrual loan interest 63,000 minus 29,000. Therefore, 34,000 accrual loan interest. As expense should be considered, calculate value. And loan should be included under non-current liability. Debentures also same way. Debentures also liability, like a bank loan. Think about trial balance, it has given debentures also. And interest on debenture also given. See the trial balance. 19% debentures it has given 520,000. 19% debenture 520,000. Then interest on debenture it has given. Interest on debenture also given 35,000. Interest on debenture 35,000. Debenture value equal 520,000. Debenture value equal 520,000 and debenture interest available trial balance 35,000. And debenture percentage is given 19%. Therefore, first one debenture should be included under non-current liability. Then debenture interest should be calculated based on percentage. That value should be included finance expense. Then trial balance it has given interest debenture. That is a value paid in cash. Balance part accrual debenture interest, like a bank loan. First one debenture should be included under non-current liability 520,000. It has given debenture percentage equal 19%. Debenture value equal 520,000. Then debenture interest should be calculated. That is a finance expense. Under finance expense, debenture interest. Finance expense, debenture interest should be included. Debenture interest 520,000 into 19%. That value should be included under finance expense. Therefore, 98,800. 98,800. Then trial balance it has given 35,000. That is a value paid in cash. Therefore, difference value accrual debenture interest. Accrual debenture interest. Debenture interest value equal 98,800. From that value should be deduct 35,000. 35,000 available in the trial balance. That is a value paid in cash. Therefore, 63,800. 63,800. That is accruable debenture interest under current liability. Separate note for that. It total value should be included financial person. Now think about fixed deposits. Fixed deposit also there is adjustment. Fixed deposit it has given 20% fixed deposit 600,000. That value should be included in between current and non-current assets under non-current assets. As well as trial balance it has given fixed deposit interest income also available. Fixed deposit interest income it has given. That is a value received in cash. Fixed deposit interest income available trial balance 84,000. 84,000 that is a value received in cash. FD interest received in cash 84,000. First one fixed deposit should be included 600,000 should be included under non-current assets. After that you have to calculate FD interest income 20% based on this value under other income. Then trial balance sheet has given received amounts, difference value receivable. Therefore, first fund under non-current assets as a fixed deposits. Fixed deposit, it has given percentage 20%. Value equals 600,000. Then under other income, you have to include fixed deposit interest income. Fixed deposit interest income. Fixed deposit interest income should be calculated based on 600,000 into 20%. Based on 600,000 into 20%. Value should be calculated. Value should be calculated. %, then take the answer. Therefore, as an income, you have to consider based on accrual concepts 120,000. This is value should be considered as income, but trial balance sheet has given 84,000 as FD interest income. That is a value received in cash. Balance part receivable asset under note number 7. Prepaid expense and other current asset, and it as a fixed deposit. As a fixed deposit, interest income receivable. Fixed deposit interest income receivable 120,000 minus 84,000. 120,000 minus 84,000 receivable 36,000. Assets. Those are the adjustment. Think about trial balance also given bank loan, fixed deposit as well as debentures. Then all the adjustment okay. Now other information available in the trial balance. Anit trial balance එක තියෙනවා එක තැනකට විතරයි යන්නේ. Think about return outwards. This is a purchase return under cost of sales calculation. Commission expense, distribution expense. Electricity expense, administration expense. Then audit fee, administration expense. And correct sales value income statement. It has considered already. Insurance expense, administration expense. Accumulated depreciation consider. This is the total value. It composition is given. And commission income, other income. Salary consider. Trade receivable consider. Import duty under cost of sales calculation. Donation, other expense. Bank loan consider. Income tax consider. Cash correct value should be included under current assets. Under current assets. Then direct fees, administration expense. Interim dividends paid. This one think about interim dividends paid 150,000 should be included under retained earning columns. Retained earning 150,000. Think how it records. Interim dividends paid 150,000 from return earnings should be deducted here. Interim dividends paid ordinary shares, retained earning columns. It is not paid for ordinary shares. Deduct. Interim dividends paid. Trial balance එකේ consider කරපු නැති අනිත් ඒවා එක තැනකට යනවා බලන්න. Then telephone charges, administration, opening inventory under cost of sales calculation, purchase under cost of sales calculation, investment under non-current assets, carriage inwards under cost of sales calculation, carriage outward under distribution expense, advertisement expense, distribution expense, discount allowed, distribution expense, discount received, other income. Those are should be recorded.